don't give back more than 3 days of gains.
Yep.
And what I did is I gave back a record month plus $4,000. And you shouldn't be giving a month back. You should never give back a month and plus 4,000 on top. Give back 3 days. If you absolutely
well said,
but going through shit, give back a week. You just kind of do it. But at the same time, you have to take the losses to learn. I think I went down a bunch of times and realized and didn't learn. You have to take the loss to learn.
All right, everyone. Welcome back to the Steady Trade podcast. Today, we have one of my kind of favorite styles of episodes. I was actually on spring break with the family last week enjoying the beautiful freedom of Florida. I could smell the freedom everywhere I went. Unfortunately, my Wi-Fi was pretty crappy at the resort I was at. Beautiful resort, but Wi-Fi was pretty mediocre. Probably all those punk kids sitting inside watching TV. They should have been outside getting a damn tan instead of watching TikTok, eating up my Wi-Fi. Nevertheless, I was on vacation, so we chose not to record. So we're going to back and just going to kind of get caught up on what's new in the world of Kim, Steven, and I, and then the general market, etc. So, but anyway, Kim, sorry.
What resort did you stay at?
It's called Marriott Grand Vista. It's actually
nice.
we've stayed there for probably ever since the kids were little. It's one of those nice places where it has everything. You don't need to go anywhere.
Nice.
The resort, it's got a little grocery store. It's got 6 restaurants. It's got a golf course. Garrison and I, it's got a bunch of ponds that Garrison and I fish and stuff. And that way I don't have to put on any shoes. I don't have to put on my shirt, I mean, it's
totally.
I'm not a big fan of masks, but I'm even more anti wearing a shirt when I'm in the sunshine. I mean, I don't see why I should be required to wear a shirt and shoes to go anywhere. But anyway, so.
That's awesome. I hope you have a good time.
Mm-hmm.
Good.
So. But yeah, so that being said, you get back and and obviously I was still working with the Steady Trade team last week, still doing webinars. It's just the Wi-Fi would kind of come and go, but it's just incredible to where we're at. Kim had a topic talking about that same theme I've talked about so many times about like people actively managing their money. Mm-hmm. Everyone's a day trader now. I mean. I've told that story a million times when I was in New York City when Bitcoin first exploded, and everyone was talking about crypto. But man, it's like that with stocks now, man. In the airport, I mean, it's just like everyone, young, old, in between, is talking about the stock market now, and I've never seen that. Now, maybe it was like that during the .com boom, maybe. But I just don't think everybody had the access to the information that we have now. So
if I may just interject, it's so weird that there's such a boom in people talking about stocks, and we're in this ongoing trend where it's non-stop discussion. Yet the market still goes through the lulls, and if we're going through this boom
today.
Why are we having these lulls? Like every single gap I crashed. Why? Except the name escapes is SOS. SOS had crazy volume and it managed to kind of rebound, but it kind of tailed off.
Yeah, I mean that was the main Wall Street bets play, but even right now it's just kind of grinding sideways, going nowhere. They tried. My boys over at Wall Street Bets tried, but they couldn't push it. So
I was longing that double bottom. Like I longed that double bottom twice, and on the third time, I was like, right, I give up. I've lost $100. I'm not losing any more money long. And then obviously it went on what would have been the third try. But my thing is like, why? I mean, do hedge funds just rule the markets? Do hedge funds even rule the penny stocks? Because how can there be this demand yet? Fine, Wall Street Bets can overturn GameStop, but that's all they can do. Like, that's all they can do. They all got together on a one-off thing once in 500 years, and they overturned one company. They overturned GameStop. They got one hedge fund. Maybe 2 or 3 blew up in sync. But isn't it back to the status quo? Don't just hedge funds control everything? Like,
I think so. I mean,
is that not it? Because
you know, and you make a great point that I want to come back to about the hedge funds blowing up, but which is a theme from last week. But I mean, I go back so many times. You know, remember, and you know this, Stephen, and a lot of the listeners know this. And I'm not trying to say I was so smart, okay? But I recognized that shift in 2015, 2016 that JJ confirmed. And again, I'm just a dumb caveman from Michigan, okay? I'm not saying I'm smart, but what used to work, you know, from 2007 to 2015, shorting junk one-day runners, it changed. The volume exploded, and they would suck you in the afternoon and then melt your face off. And I think going back to that episode, which again, I know we talk about it all the time, but it's probably my number one favorite. But JJ confirmed that. He's like, hey, all these guys that like left Goldman Sachs and started their own little shop, they're like, I think, you know, they're all like, hey, we got, you know, we don't have, you know, we're not Ken Griffin with 10 trillion, but we got 10 million and we can push around these little low float stocks, you know? So,
but the only main thing I want to talk about is like why and how traders should change the style. Because like, for example, today I was like, you know what it is? I'm almost burnt out by 9:30 trying to make something work. And
I was done at 9. I was on the webinar. I'm like, man, there's nothing.
There's nothing. But then you're trying to force things work and you're jumping in this and then you're jumping in that. And I think, do you know what it is? The only, like, generally when the market's hot, all good. It's always good to trade. But you can trade pre, you can trade after hours, you can trade during the day.
Long and short.
Long and short when the market's hot. But when it's not hot, like, don't trade the only time you even might make money, which is 9:30 to 10, 3 to 4. But like, you may as well just, like, for me, I'm like, I may as well just skip pre-market because I'm just getting pissed off and burnt out. Do you know what I mean?
I mean, why don't you? Like,
well, I'm not trading pre for the rest of the week. I'm done with it.
It just seems to me that if the market isn't giving you what usually, I would just be like, I step
because we're degenerates, Kim.
But it's hard. Like, I'm watching King Kong versus Godzilla, being like, don't go to the market. And then I'm like, but the market's better than King Kong versus Godzilla. I'm like,
I've got to believe it is
$1,000 cheaper.
Seriously, another Godzilla movie?
Like, someone said it was the other day.
Why not read a book about the markets or about NFTs or about what is happening in different countries? Like, I just would think
all I care about is trading. Like, I'm a total degen, and like, I would rather lose $700 being an idiot than spend $700 on the high street. Like, that's how much of an idiot degen I am. I'd rather lose $1,000 on and then hate myself asleep in bed. I'll hate myself. I'll go to bed angry at myself at how bad a human I am. And I could have had $1,000 worth of clothes instead, but I still make the same mistake.
Yeah, and I think Kim, you make a great point. And you know, and that's something that, you know, and again, it's like, it's something that I, one of the reasons I came to StocksToTrade and started mentoring was, again, you know, I talk about those dark days of day trading from 2012 to 2015. It sucked, man. It was like today every day. And I struggled with the same, and I'm not saying I got it licked. Okay.
Right.
When it comes to like trading on slow days or over trading, you know, I'm that recovering alcoholic. Okay. I haven't defeated it.
Right.
I'm managing it, you know, so, but one of the reasons I came to, you know, when StocksToTrade approached me was I was like, thank God. Cause when they came to me was roughly 2015. And I'm like, I need something to do. Because just like Steven said, I'm not going anywhere. I mean, I'm sitting at this computer all day long because I'm just as much a degenerate as he is. And that's why I love the mentoring thing. That's why I get so motivated by it, because Now, like today, I'm just like, man, there's nothing out there. Let's talk, and I still did the webinar, but we were talking way more about more concepts type stuff. I'm like, hey, let's talk about, some of these chart setups, some of, versus specific tickers. Cause I'm like, there's nothing out there. Maybe SOS, like Steven mentioned, but I'm like, I got my notes. I'm like, SOS, I'm like, it's a 5 or a 6. I mean, it's like, it's okay. So
you're literally punting. You're literally just punting, hoping something works. You're like, I'll manage my risk. I'll size down, but I'm.
But hope is not a strategy. You guys have taught me.
I'm not saying hope's not a strategy. I'm saying punting is a strategy. punting is like less size, less risk.
Okay.
But no, like, look. I mean, how's the market been? I mean, it's been unexpectedly quiet. I remember in the end of 2020 coming into 2021, is this mania ever going to end? Well, it's kind of ended. So,
well, I think, and I made this point last week, on several times on pre-market prep, because again, I was still, that's that, morning webinar I do every morning. And, a lot of people were asking the same thing. And I will say this, 2 things. The 2 biggest, remember I was on spring break with the family. The 2 biggest spring break weeks are last week and this week, day before Easter, true. Day after Easter, or week before, week after.
Yep.
So many people like me. I mean, my family vacation, we go to Florida for spring break every year. Last year we missed because, everything because of the shutdown. So before we get too alarmist, I feel like a lot of people, much like me, were like, hey, we're going this year. We were doing a bunch of stuff all week and et cetera. And it's just like, I think a lot of people miss that family vacation and they're doing it,
It was
whether
packed.
that's
Hawaii was packed the last couple of weeks.
Yeah.
Packed with people that haven't been coming. So I think you're totally right. I don't think the lull is going to stay. I really don't.
Not at all. Yeah.
I've just kind of got one last question, and then I'm gonna let it. But Tim, I just wanna ask you, like, after the vacation and time with your family, how do you feel? Like, how do you really feel?
Oh, I tell you, it's funny. I think it was a little bit the Wi-Fi last week. So I was, I'd get a little frustrated with the Wi-Fi, but I mean, I came back in Monday doing webinars and everyone was commenting. They're like, and I'm always, I'd like to, I'm always pretty positive, but everyone was like, man, you're in such a better mood. You're more energized, so no, I love it. It was a blast, and here's the thing, I love my family. Nobody loves their family more than me. I'll fight you if you say you do, but it was just so nice to go somewhere, man.
Yeah, exactly.
I mean, and it just, and listen, coronavirus is a big deal. I get it. We got to do what we got to do. But I mean, it was just so nice. And like even, and I don't want to get into some political debate on the podcast, but we all know Florida's very loose on masking and stuff. And I mean, we were there one day and my wife is a social butterfly. I mean, loves to just chat. We're always the last people to leave, it's like anywhere we go. It's like, I'm like, let's go, but, and, one day in, she's like, it's just so nice to see people's smiles. And I'm like, I know. I'm like, and again, it's just like, and I think that was one of the biggest reasons I was just going somewhere, seeing people laughing, splashing at the pool. It's like,
it's called socialization. Socialization. We need it for our psyche, for our mental well-being. We can't be completely isolated. It's not healthy for us.
And that's why, I mean, again, I'm just, if you're a listener out there and you got like young kids, man, I feel for you. I mean, my kids are basically adults. I mean, Lily's 16, Garrison's 19, but it's like, geez, man, I just wonder, I don't know what closing down the schools will do, long term. And it just bums me out. But, and the reason I say that again, it's just, I was in such a good mood. And, and my wife makes that point that, I mean, it's just strangers, but just seeing people smile and having fun and and family, So anyway, Stephen, it was great, even though you weren't there. I didn't miss you. Stephen.
He was willing to go. You could have sent him.
Well, do you know what? You think your country is bad. My country wouldn't even let us leave me country. I'm not even allowed to leave. I'm not even allowed to get my haircut, man.
Well, that's the felon stuff, Stephen. I mean, when you've got like 17 felonies, that kind of happens. You know?
Not true. The British government says do something, and the British say, yeah, probably in my best interest. There's a virus killing people. I'm gonna do what you tell us, because the government generally is a good acting body. America, I think you guys should possibly not communicate when there's an infectious virus. America, riots. We're going to riot. We will not be told what to do.
And again, listen, I'm not, I am no, I'm no virologist. I'm no epidemiologist. I'm just answering the question, whether, and I don't even know. I'm too dumb to know if the lockdowns were the right thing or not.
Lockdowns work. Come on. Like, I don't want to interrupt, but come on. Like England's cases went from 20,000 to like 300. Lockdowns work, but then it picks back up again.
But damn it, it was sure nice to just like go back to normal stuff. That was my point.
I'm glad you had such a good time. Don't worry about me. I'm fine, but I'm glad you had a good time. I'm really glad you had a good time in Florida. Don't worry about me. I'm fine.
Hey man, you're on the other side of the ocean.
As long as you sold the
I got my vaccine. I got one of my 2 vaccines.
Oh, really?
Yeah. And now I heard a rumor that the CVS Long's drugstore had extras and that they didn't have enough people to give them to. So I just kind of went in on a lark, and they were like, yeah, if you can do it right now. And I was like, I think I'm going to do it.
Definitely can do it right now.
Yeah. So I did it. And I have the second one, the one they say is the, where you sometimes will have a reaction in 3 weeks. So wish me luck. Yeah. But I have a big
don't do it on the day of the podcast.
I won't do it on the podcast day, but I have a big trip coming up in September. So I thought I have to probably get other vaccines too. So
what's new with you, Steve? How's it going being locked in your house every day?
I mean, look, it's no secret. I was running super hot trading. I was up like 17,000 on the month, and then then give it all back plus a few thousand more. So like that was tough. But
what ticker was it again? Refresh my memory.
SEAC, SEAC, SEAC.
Okay. What was that?
It was a technology company with a multi-million-dollar contract win. That was kind of dubious, but it didn't have like a partner in the name, but it was a contract win, high volume, pretty thin. I can't remember the float.
Oh, I remember SEAC.
Yeah, sorry, SEAC.
Your stupid accent, that fake accent of yours that you guys make up to try and sound smarter than Americans, but yeah, SEAC. That's right.
Yeah, so like honestly, March ended red. First red month in like 6, and the red month was lower than the green months. So like it's not catastrophic.
What happened?
I just got in the habit of adding the losers. And
well, here's I'll let Stephen answer, but basically, Kim, what he did wasn't a bad idea because again, this is going back to spring break week. If the listener wants to look up the charts, SEAC was like the only stock that did anything last week, so unfortunately it can happen, but I mean everything else every day, every morning runner fell apart. Stephen chose to get a little bullheaded on the one that didn't fall apart,
Mm-hmm. Yeah, but
what was it that you saw? What was it that you saw?
Honestly, it was the day before. I'd been long biased on a trade, realized that it didn't have the strength in the morning and flipped short. And then with SEAC, I did the same thing. I thought this is it's a contract win. It's a bullish. Overall, the overarching is like, it's not even conflicting indicators of the 10 variables that we'll look at. It's almost bullish. Took it long, flipped short, got stubborn. And I'd been adding to losers, got in the habit of adding to losers for a few months, and just always got away with it. Or like I'd go $2,000 down and pull it back, or I'd go $2,000 to $3,000 down and I'd take a $2,000 loss, and that was one of them things. But then one day I took a $5,000 loss, and then one day I took a $15,000 loss, but I pulled them back each time, got away with them. And then this one I covered the top. It's just one of them things.
Yeah, that's the AC. That's that. I mean, that three wave pattern that I talk about a lot. I mean, I'm looking back at it. I mean, it was a beautiful dip and rip. 9:45 a.m. broke the pre-market high, squeezed all the way up, pulled back midday, broke at noon, ground sideways, and then spiked into after hours. So I mean, it was like, that's like exactly.
It was the fail under VWAP though. It was that pull under VWAP that got us, because I was actually up a few hundred on the day, but it pulled so far under VWAP. I thought that's not coming back. And if you get too biased on a position and you don't let the price action dictate what's actually happening, you can really pay for it. But I mean, look, honestly, I'm not. It didn't hurt us that bad. It didn't hit us that bad. Honestly, I just thought you've been getting away with that in the losers for months and months. You've had several warnings, didn't take any of them, and then you paid for it, and just don't add. And that's the lesson. Just stop adding to losers, and I'll be fine. I've got a very good at trading. Do you know what I mean? I'm good at trading. I just eliminated bad habits.
Where do you think you could have seen that? Like, just can you tell me where that you should have noticed something different, just so I can understand?
My whole trading career is like, here's your plan. Plan didn't work, but the setup, big picture is bearish. So I'm just going to add because I know it's coming down. Like, if it's bullish, I'm not gonna, like, I always had a saying where I'd be aggressive on bearish setups. I'd be aggressive on the real weak stocks because I'd know they're coming down. But then I'd be very bearish and very tight on some of the more volatile 200, 300 million on the day stocks. I wouldn't really, if I trade them, I'm getting out quick. I've got a quick stop loss. And then just be disciplined seeped. And I started being less disciplined with the strong stocks as well as the weak ones. And with discipline, I think you've got to have it all or have none. You can't just have it in between for this, that, and the other. Do you know what I mean?
Yeah. And again, the volume was just, I mean, that would be the one quote unquote tell was, I think it traded 400 or 500 million shares that day.
Started late though. That's also threw us
okay.
off.
I can't remember
40,
exactly,
50,
but
it was late by these days. It was 40, 50 million, 10, 30, 11. I'm like, it's only traded 50 million by 11.
I always like that.
And it's under VWAP. Those two things threw us off. But look, you've just got to have a plan. Like, and it's a huge thing if you don't have a plan and say, me max loss is this, and if this price hits this area, technically, that's me max loss hit. If you don't have that, where is it?
I think especially like you said, I've heard guys call it like that oh shit handle, where it's like or it's like on the train and you pull the brake. I think that's a big point that I don't know if we've talked about this that much, but you have your plan. And again, I think I've joked that we should like rename this the Have a Plan podcast, probably said it 80 billion times in 200 episodes. But also, I think you have to have that max loss. If you're trading these wild stocks, long or short, you got to have that point where you're like, I am done. I'm not going to try and make this work. I'm not going to add to a loser as it continues to fade. I'm not going to add to a loser as it continues to spike. And whatever that number is, it's got to be based on your account. To me, I always say it should be a number that pisses you off, but also doesn't like completely screw you up psychologically where you're like, I just, and I've been there many times where it's like, I can't do this. This isn't going to work. I don't want it to be that kind of number. I want it to be a number that you're like, damn it. You're pissed, but you're not giving up.
Wouldn't that be risk management? Is that risk management, Tim?
That's more emotional, man.
It's give back 3 days though, right? It's like, don't give back more than 3 days of gains. And what I did is I gave back a record month plus $4,000. And you shouldn't be giving a month back. You should never give back a month. And plus 4,000 on top. Give back 3 days. If you absolutely
well said,
but going through shit, give back a week, but don't give back a month. Like, give them back a month. I know it sounds like I lost a lot, but I give back a month plus $4,000. Like, that's it, or $5,000. But you just kind of do it. Like, but at the same time, you have to take the losses. to learn. I think like I went down a bunch of times and realized and didn't learn. You have to take the loss to learn.
Well, again, and we talk about that a lot, ultimately it's like, I mean, we, all three of us, or you can watch YouTube videos or you read books, that says, take losses quickly. Hell, Tim Sykes did a 20-minute video, my boy, saying take losses quickly for 20 minutes. That's all he said. But ultimately, you got to feel it. I mean, I wish it wasn't that way. I wish you could just read it or watch a video or listen to this podcast. But, at some point you gotta feel that and then be like, damn it, I ain't ever doing that again. I ain't giving them 2 months back. I'm not giving, hell, people give back a year. We've had people on the podcast that crushed it for a year and gave it all back in one trade, so, but.
Yeah. But look, what I do want to say though is like the one thing I want to tell people about it, and then we can close it, is that I've lost $500 before. I'll never forget. I lost $500 on plug, and I didn't get out of bed for 2 days because I was so depressed. But I'd been losing consistently, and I was down like 10 grand, losing, and I lost 500, and I was like, me world had ended. Once you get profitable, taking the losses, it's not as bad because you can make it back. You're like, you know what I mean? You're not losing your own money that you worked a 40-hour week for. You're just losing money that you made in the market. So it's not as crushing as people might think. It just sucks.
Again, and that goes back to the very first episode. It's like, when you say keep those losses small, it's because you got to get through that shitty period, whether it's 6 months, 9 months, 2 years. But, just remember that at some point, if you don't blow up and you keep putting in the work and putting in the time, you take it seriously, you'll start grinding through you'll start grinding to profitability, but you gotta just take that pain in the beginning and don't blow up. Don't take yourself out.
But if you blow up, make sure it's with a $500 account or something like that.
Exactly.
Like blow the $500 accounts. Like I remember with Trade Zero, I had $500 account after $500 account. I blew about 7 of them.
Yep.
And also to the point of leverage, like leverage is okay if you've got a $500 account, 5-to-1 leverage. Like that's kind of okay because it's giving you money to trade, but you're not
right.
If you blow, you're only blowing your 500. And if you blow more, just change brokers and don't pay them. It's their fault in this day and age for letting you over. just walk away.
just play the victim. Play the victim.
Just be like, that's 20. I'm out.
Yeah, that's 2020, 2021. Just be like, it's not my fault. I'm a victim.
I've got no
so
money.
Kim, before we wrap up, Kim, what's new with you?
Oh, just been doing Instagram lives, taking a lesson from your magic. And it's been just amazing I'm just so amazed at how supportive other traders are to the traders that come forward with their challenges. People have started to like buddy up. I just keep talking about people they keep saying how lonely they are, how they need to have somebody by their side. It's so inspiring. So now all these groups have gotten together.
Now,
so listen,
trading was always a lonely game.
Agreed.
But when you're like, at least you could like at 4 p.m. the bell rings and you go down to the coffee shop or something. But we haven't had that,
and see those smiles or hear those smiles. So so Tuesdays and Thursdays, 4:30 p.m. Eastern Daylight. It's just been so much fun, and the stories that come forward, and I just keep trying to put things out there that I see from just my own journey around emotional intelligence that potentially help the traders. Yesterday we talked a lot about attachment style, and it was an interesting conversation how our attachment style from childhood potentially is the lens that traders are looking through. So I'm sending everybody to go, do their attachment style assessment. I'm just becoming even more and more curious about what are the tools that I've just collected along the way of my own journey that potentially help traders see themselves in a new light. And it's just been fun because the more people that are willing to talk about it online, then you hear other traders are like, hey, that happened to me, you know, around the emotional side of it. So
now, well, if you head over to steadytrade.com and get the link, but what is your, I follow you on Instagram, but
Kim Ann Curtin, KIMANNCURTIN.
Cool. And Tuesdays and Thursdays, 4:30?
Yeah.
Okay, cool.
And it's been fun. Stephen came in what week?
Yeah, no, and I like it, and I like supporting others, and even helping. We all help each other, right? And I always think of trading as it's not me versus you, it's us versus them. That's how I think of trading. So it's cool to help people and have a community.
Yeah, that's a great point. You know, when I like the way you said that. I mean, it's like, listen, as us as the retail traders, and listen, I don't care if you got a multi-million-dollar account, you know, going back to, you know, Ken Griffin or, you know, or any, I mean, it's still us versus them, man. Even if you got 10 million bucks, I mean, there's a big difference between, I mean, hey, 10 million bucks, a lot of money, but there's a big difference between that and you know, 600-foot yacht. Okay. You know, it's exactly. It's us versus them. Sure. So
still a nice sailboat, but it's not a huge yacht. But here's the thing, like, okay, so did I send this article to you, Tim? Or I don't know if you sent it to me. If you did, I'm sorry. But that article that talked about the psychology of the country right now around trading. So I have these parts that I just want to speak to. It said, first, American psychology and attitudes around money are changing. A combination of a loose superiority bias, the belief that we can be more financially savvy than we actually are, which is, I think, a cautionary tale, and why it's so important for you guys to listen to these podcasts and to be with Tim in the morning, because there is that a little bit of, what do they call it, American exceptionalism, where we see ourselves as like, oh, we're better than everybody else. But then it just talked also just about how, you know, Vanguard, even how Vanguard started, that Bogle, you know, was seeing an opportunity. And that's what I think is happening now. Like, honestly, there's a part of me that feels like it's just beginning.
Oh, yeah.
It's just beginning.
You know, and again, it's funny, actually, you mentioned that when I presented at the NASDAQ, you know, I got to ring the closing bell there. It would have been 2 years ago last week. And so a little clip came up in my memories, you know, 2019. And basically, and again, I'm not trying to brag or whatever, but even then I'm like, something is happening right now where the everyman is now able to compete. And then, you know, this is again, 2019, Robinhood was around, but not many, you know, nothing like it was now. You know, it's not like everybody was commission free. You know, we didn't have Wall Street bets, you know, and yeah, I just think, you know, again, I know we kind of started this podcast out talking about this slowness, which again, for me as the gray hair old man, if I had a week like this back in 2012, I'd be like, it's amazing. Never seen anything like this, you know, but I think we're just getting started, you know, it's just that, and we've talked about this a lot, but that cat ain't going back in the bag, man.
No,
you know.
No. And this was, I think it was an article that I saw on Howard Lindson's blog, and it's Andreessen Horowitz, and it's called Buy and Hold No More: The Resurgence of Active Trading. Anish Akara and Matthew Hafmeister. And this article, I'm telling you, is just, and they also talk at length about these different platforms. Some of these I've never heard of: Alpaca, Plaid, Drive Wealth, and Apex Clearing. Never heard of them. Like, just the availability that's happening of traders being with other traders is also completely changing, and the ability to, you know, buy $10 worth of a stock that you could normally have never purchased before. So there's like, they give you a list of all the fintech new companies that are out there, and this is just, and Wall Street Bets is of course among them, but I mean, look at that. There's just like a crazy amount of companies that I've never heard of. Can you see them, Stephen?
Yeah,
like,
I mean,
it's
Apex Clearing is who I'm with. Apex Clearing, I'm with. They're one of the.
Is it? Are you?
Yeah, they're one of the people that I'm with. Yeah.
Okay, but it just feels like it's just beginning.
And that's what, you know, that's what drives me nuts when, you know, in 2 points. First of all, we had 2 hedge funds blow up because of over leverage. And one of the biggest things that drives me nuts, is when I always complain about the old, these old, complaining guys, it's always dudes complaining about people YOLOing their $500. And I'm like, man, meanwhile, you take 10 billion, leverage it up to 150 billion and blow that up. But that's different. But what I love, and I'm not encouraging YOLOing, okay? But the nice thing about right now is that accessibility. I mean, you can listen, my son's throwing around $50 here and there, learning.
But it's an investment in your education.
Yep, because
that's what Mari said in our interview. That was the most amazing. Said her parents saw that this money she's putting into her trading is actually her education. It's like her college tuition, investing in her learning. That was
and what I love about it now is it is accessible. I mean, I think about, a decade ago, getting a brokerage account, is paperwork, days. Then you'd have to do an ACH because, again, a kid doesn't know how to do a wire. It'd take you a week, all these hassles, then the commissions would bleed you dry. Yep. Listen, if you had a $1,000 account 10 years ago, good luck. Because even if you did do okay, the brokers made all the money, at the reason they call it a broker is it makes you broker, it's like, but what's great now is, at least if you're screwing around, and you're learning, like you said, and if you YOLO $500, you're like, well, I won't do that again. Like the classic YOLO trade, as they say, is, go enter, buying a bunch of options before an earnings announcement, and that's something I will, anybody, if you hold into earnings, that never works. It always goes against you, but you learn that now and you lose $400. Well, what's $400 worth, from an educational standpoint? I'm not saying it's not a lot of money, but I've blown $400 on a lot of stupid crap,
Books, just bad books.
Yeah. See, that's probably $400 worth of books over there,
Exactly. But they also talked about.
I got like 6 iPads that are floating around that I probably spent an hour on each one of them,
Exactly. But they're talking about, and this is the part about the hedge funds, like, I used to work for a hedge fund, so I'm not anti-hedge funds. I have become a little bit more cautious of them because I can see what's happening to day traders on a daily basis. But it spoke to individuals as institutional scale asset managers and this bottom-up community. And all I keep thinking is, if this continues and people like your son, who perhaps before weren't really even thinking about going in this direction, it potentially has the ability to become, I think, bigger than those hedge funds. And that, look, these companies are all making a profit off of us, right? Mm-hmm. So the point is, if this becomes financially in the best interest of all of these firms, all of us being traders, then the whole market is going to completely shift along with us. So I just feel like this is a time in history that's never going to be forgotten.
Yeah, I think, and again, I probably stole this term, but I started saying this a year ago, that, that democratization of finance is, again, you go back to the commission free, that was one of the biggest ones. You go back to being able to, listen, what Robinhood got right was the onboarding process.
Yes.
That's the biggest thing they did is, you can, which again, as an old timer, blew me away, waiting a week or weeks to get a brokerage account set up. You're onboarded and you're trading the same day. I didn't even believe my son. This was like last year. He's like, I opened a Robinhood account and I made a trade today. I'm like, you did not. I'm like, you can't trade the same day. He's like, no, I did. I'm like, so I Google, I'm like, and that's one of the biggest things that led to their success was that onboarding process. And I'm all for it, man. I'm all for it.
Yeah.
And we can blow up every short seller in the process. They can all rot in hell.
Just don't blow me up. I've lost enough recently. But I've just got one final thing to say. It's very quick. $5 commissions, $7 commissions per trade was a bargain back in the day. If you got $7 commissions per trade, or even $5, that was a pretty good broker.
Oh yeah.
Now it's a bucket trade or it's free. So don't complain about how hard trading is, because it used to be harder.
Yep. Oh yeah. Well, yeah, that's just it. You know, you make that point. And you say it was harder. I mean, it's like you were trading the same stuff, but it was like you had 50 pounds of weight on your back, because it was like, gee, you could be like, hey, I made 20% on a $50 position. Well, 15% or 50% of that 20% went to your broker, and it was like, I know so many people that would get to the end of the month, and, I know you should be looking at your account statement every day, but I know a lot of small traders, they'd get to the end of the month and they'd be like, I thought I was doing well. Where's all the money?
You have to beat the market, then beat the broker. That's how it used to be.
Well said. Yeah.
Thank God it's not like that anymore.
But it's exciting. I think it's so exciting because it means, first of all, like I think also it means more people will be educated about what's happening in our world. Like people will pay attention to supply chains. People
pay attention to what really matters. That's what I love about it.
No,
well done.
Think so.
Because now I don't care about what's on TV. I don't care what the sports teams are doing, And well done, Kim. I mean, who cares what Kim Kardashian is doing? Okay. Who cares what
she's becoming a billionaire? So I think paying attention. I think paying attention is not such a bad idea. It doesn't mean you have to watch Keeping Up the Kardashians, but that's a woman who's very entrepreneurial and knew how to leverage that shit. But instead of watching Keeping Up with the Kardashians, read about what that woman has done. Exactly. Like that's the distraction. Oh, I'll watch the show. No, look at her makeup lines.
Her sister's even more impressive. Yeah,
these women are. I love her quote. She always says, "Not bad for a girl who doesn't do anything or doesn't know anything." Right? Because she gets made fun of all the time, but she's laughing all the way to the bank.
Yeah, who makes fun of her? Broke people.
Exactly.
Broke people. Losers.
But just
losers.
As a final message, though, you should not watch other people's lives when you could be building your own. And that's just the reality. Like,
well, you can be influenced by them in an encouraging sort of way. Like, wow, this is possible to have leveraged a, what do you call that, reality TV series to that kind of a level. I wouldn't say envy it, but like be curious. Like, wow, how did she do that? Could I do that? Could I do something in the branch of that? Like, just pay attention.
Take certain.
And as always, God bless America.
God bless.
Where did it happen?
America.
Where did it happen?
And Queen Elizabeth II.
American exceptionalism.
Yeah, exactly.
American exceptionalism.
Yep. Best thing we ever did was kick Stephen's ass back off this continent 250 years ago. Best thing we ever did.
I mean, I'm not that bothered because I wouldn't be. I would luckily I'm not talking with a silly accent. And, I'm not uber polite for no reason. So I'll take being British even if my hair is long, and I'm a prisoner in my own city.
All right, everyone. We'd like to thank you for listening to the Steady Trade podcast. So much going on out there, and again, I think Kim nailed it right at the very end, and and that's the greatest thing I think about trading is it's just so. I mean, listen. She mentioned supply chains. It's like, how do you get excited about supply chains? But now once you're talking about trading and all of a sudden there's a ship stuck in the Suez Canal and you're like, and there's trading opportunity. I mean, RAIL, RAIL was one of the best swing trades over the last couple of weeks. That thing was running because of the whole Suez Canal. So it's like, that's the exciting thing is now you care about maybe stuff that you weren't interested in because now you're trying to find that next trade opportunity, pickup trucks. Okay. What's the most boring thing in the world? Pickup trucks. Yesterday, GM has their big announcement that they're going to go hard on a pickup truck. Guess what was up there all across the board today? All these other small, SPACs or penny stocks that are in the EV market, particularly truck related stuff. I mean, it's like, to me, that's cool. It's fun, and you can find those ideas, and it's not that hard. It's like, just find stuff, especially right now. That's the great thing about the markets, is just find stuff that makes sense. I can't ever recall a more swing trade friendly market, because people are just like, hey, GM's getting into pickups, Tesla's got theirs coming, Ford's got theirs coming. And then all of a sudden today, what are some of the, they didn't go wild today, but they're all grinding higher today. Great swing trade type setups.
Yeah.
So,
yeah.
All right, everyone, be sure to check out Kim on Instagram. Again, we'll link it over on SteadyTrade.com Tuesdays and Thursdays at 4:30 Eastern. Steven says on his bio that he goes live every day at noon, but I think I see him live about once a month.
That shit's free, and I did it.
You forgot to update your bio that you're live every day at noon, but hey, it's fine. I'm not here to judge. So check out Kim and Steven. Have a great week, everyone, and thank you for listening to the Steady Trade Podcast.